What's going on, Trade Pros? This is Mark from Trade Pro Academy, and in this weekend's video, I'm going to be giving you guys a very simple process you can use at the end of the week to identify key levels of support and resistance for the week ahead. We're going to roll the intro and get after it. All right, Trade Pros, welcome back. Here is my TradingView platform. The asset you see in front of you is gold, but ultimately it doesn't really matter what asset you're looking at because this process works for any market. All right, and so I just so happen to have gold up here, but let me explain to you guys this very simple process that I like to use at the end of the week before the week ahead to kind of help me identify potential price targets for the week ahead, as well as to help me identify where we are on the longer term, as well as potential opportunities for shorter term trades. All right, and so this whole thing starts off on the monthly time frame. All right, and what I love to do is I like to identify the prior month's high and the lows. So the process in and of itself, really quite simple. I like to look for the prior month's high and the low. I like to identify the prior week high and the low. And then throughout the week, I like to identify the prior day's high and the low. And the reason for that is relatively simple. Okay, the reason for that is that if the market is going to make new highs, if it's going to continue in a bullish trend or in a bearish trend, what you need to get above is a prior day's high. All right, on the daily time frame, for the intraday traders, prior day's high or prior day's low, a lot of the opportunities are going to be around those levels. Same thing for maybe swing traders, prior week's high or prior week's low. A lot of opportunities are going to be found there. And same thing for position traders, prior month's high, prior month's low, a lot of opportunities at those levels. And so that is why it's very important to have them identified on your charts for the week ahead. And really the other reason is that as humans, we tend to overcomplicate things. For some reason or another, we have the belief or the conception that simple doesn't work. There's no edge with simple, that we actually have to have a whole bunch of moving parts in order to have an edge in the markets, because the way that we see it, the more moving parts there are, the less likely it is somebody else is doing it, the more likely we have an actual edge. When in reality, it's the opposite. All right, simple is best when it comes to trading, because simple means you can repeat it. And if it's simple and you can repeat it, that is the formula for consistency. And that's exactly what you want as a trader. You want to follow a consistent process as it relates to your analysis, as it relates to your execution. And so this is going to be a nice little process that you guys can start to use in order to simplify things and really stop second guessing whether your levels are the right ones or not. These are levels based off of higher time frame levels. Really, I'm using levels a lot, but they're based off of higher time frame levels. And so they are going to be stronger levels than, say, you're using intraday support and resistances, or really any other techniques. Not to say that's not the right thing to do, but to keep things simple, I found this is a very easy process. So what we've got right now is the monthly chart. Now, I'm going to put this on replay to a part of the chart that I'm not too familiar with, but it's got to be within the last year because the intraday data won't support much further than that. So let's just pick an arbitrary month. Let's do this one. All right. So this is how the process looks. All right, this is how the process looks. So the first thing that I love to do, identify highs and lows of the month prior. So highs and lows of the month prior, grab the magnet tool, grab the horizontal ray, plot that on the charts. All right, and so I'm gonna make this a monthly level because that's what it is, and the lows of that chart. All right, so that's where we are in the grand scheme of things, highs and the lows. And so that gives me somewhat of an idea of what to kind of expect for the month ahead. All right. If we're going to see bullish movement, we're going to have to clear above these 1703s. If we're going to see bearish movement, we're going to have to clear below these 1450s. All right. If we are unable to get above or below these levels, we're likely to range in between. And you can also use that as, potential price targets for the week ahead and really for the month ahead. So next thing to do, once you've identified the monthly high and the monthly low, you drop down into the weekly time frame and plot out the prior week's high and the prior week's low. All right, so in this case, prior week's high right up here, and that is going to be purple. All right, and the prior week's low is right down in there. All right, so from the weekly chart perspective, all right, what we can see is that we are within the confines of the prior month. All right, and over the course of last week, what we did was we came all the way up to 1640s and made a low of 1480s. All right, so within the monthly range, you're also seeing somewhat of a weekly range developing. And so how you can use these, this is the weekly time frame. You can drop down into the daily. So same idea is present here. If the market gets back above the prior week's high, the next target then becomes your monthly high. All right, same thing to the downside. If the market manages to trade below the prior week's low, that initial target would be the prior month's low. All right, and so that's what the weekly looks like right now. Let's have a gander at the daily time frame. All right, and this is what the daily time frame looks like. And one of the reasons I really enjoy this process is because it's relatively passive in the sense that the monthly levels, you'll only have to plot these once a month. Every time a new month forms, you plot the prior month. All right, the weekly levels, you only have to plot these 4 times a month. All right, at the end of each week's close. So at the close of Friday session, you can jump on your charts, have a peek at, where the prior week high and low was, throw those on your chart, and you're kind of set until the next week starts. Now, the last part of this process is the daily highs and the lows. All right, the daily highs and the lows, those are very, very important. All right, and so what it looks like here is March 31st. That looks like the week had closed there. All right, so based off of what I'm seeing here, okay, so the week actually starts here on the 30th of March. All right, so on the 30th of March, week starts here. So prior day's high and the low, we'll call it right now, we'll say prior day's high is right here. So that's going to be yellow or the daily. Right, and that's yellow as well. So that is the prior day's high and the low. All right, and so same kind of idea applies here. We've now identified the range from the week, and we've identified the prior day high and the low. And so how you can use this information is basically as such. If we can close below this daily low, all right, this prior day's low, then we can look to target a move back down towards the bottom end of that range, 1480s. All right. If the market fails to make a new low below this level, at that point, you can potentially look to fade this bear momentum with the target being the prior day's high, and then the extended target, the prior week's high. And then heck, if you caught a really good one, you might even be able to run it up into that prior month's high. Okay, and so that is effectively what it looks like. You've got these 4 levels. Now, the last thing you can do is kind of drop down intraday and see what that looks like. So let's drop down into the 4-hour time frame here. Okay, and we have identified the prior day high and the low. All right, so in this kind of a scenario, you can say below this level, strong 4-hour close below this level, you can look for rotations up to sell it back down. Now you've got targets, all right? And these targets are based off of higher time frame levels, so they become quite strong, all right? Quite strong, and you can test this out yourself. This is introducing you to a process that you will then have to go on and, really apply and make it your own. But let's see what this would look like here. Right? So you can see right now, 4-hour candle, we kind of close back within that range. All right. And so 4-hour close back within that range. What did we say? If we fail to get a move back down below this level, if you're looking to fade, where does that target become? All right. That target then becomes your prior day's high. So let's see if it'll allow me to drop down into the 1 hour. It will. Perfect. All right. So on the 1 hour time frame, you can see the market has traded down. It's kind of catching somewhat of a bounce. All right, and so let's see if it can come back down, fail, and then we can look to take a double bottom. All right, just because it comes into a level and fails doesn't mean you want to take it. You still have to apply, the strategy to it, but these are some great levels. So if we come back down in here, fail, then we could potentially see a move back up towards the top end of that range. Alternatively, a move back below this level. Right, a move back below this level would be ideal because that's kind of going with the side of the trend for the time being, right? Because you can see that we have failed to break above the prior week's highs. We are making lows. A move below that prior day low would confirm the idea of bearishness, and we would just look to use this level as a flip zone in order to catch some more downside. Do you have to run it all the way down here? No. But it becomes a decent little target here. All right, so let's see what the market gives. Okay, so we are right back at that support, and you can see we've retested the support, decent volume on the way down, but we failed to go any lower. Now we have pressed on up. So if you were to look to catch a long trade here, for example, this is kind of where you'd want to do it. We've closed back above. All right, you get that stop below the prior day low with the target being the prior day's high. Let's see what this gives us. Okay, and so that's kind of the idea there. So you can see the market had failed to get back below these lows. All right, the market failed to get back below these lows. This is in black, so it's not going to work. But the market failed to get below those lows, and that gave us the opportunity based off of the prior day level. We said if we got a strong close below, we would look for a continuation lower. If we got a failed move below that prior day low, that opens up the potential to catch a quick move to the upside. And so you can see that was the way that you can use these levels. All right, that's an example of what one trade would look like. But if you were to have a large position size on this, you can look to potentially run it. But because we are in the confines of the range here, you want to get closed out of the position, at least partially, towards the prior day's high, and then see what happens next. All right, we've already failed this level, so it's showing obvious signs of sell pressure. However, we've just caught a rebound. So the question here becomes, what does the market do at this level? Well, you've taken that trade. Now you rinse and repeat. What does the daily look like? All right, so prior day, once you got that trade in there, prior day, you move it up again. So on a daily basis, you are going to be moving these. All right, you're going to be moving these. And what you want to see now for a continued upside is a close above the prior day's high. All right, you want to see a close above the prior day's high on this time frame in order to potentially catch a opportunity for a run to that weekly high. All right. And so that is basically how you would use this process. All right. Identify the monthly levels, identify the weekly levels, identify those daily levels, and use the expansion and the contraction for your own benefit. All right, great targets, great levels to keep an eye out. And if you guys did find value from today's video, please do let me know. Drop some of the comments down below. Let me know what you'd like to see from us more often. And if you guys do feel like you found value in today's video, we'd really appreciate if you can subscribe to the channel, smash that like button. And finally, we've got a free trading community for you guys. If you guys are interested to see what we're about on a daily basis, we post our analysis, we post trade reviews, we post market commentary, anything you want in there, we've got it. Check it out, community.tradepro.com. Until next time, guys, good luck and good trading. Take care.